So, Kumar, we are live.
Okay, nice. Okay, hey.
Awesome. So, folks that are tuned in, welcome to another edition of LinkedIn Live from Opeka. So, based on the past, some of our LinkedIn Lives, a few folks reached out to me saying that we need to have more conversations around enterprise, how to sell to enterprises in India, sell to global. So, today I have with me Kumar Karpe. He's the co founder of Kapittx. It's a AR automation platform. And Kumar built and sold a company before, and this is his second startup, and has a decade plus experience of actually selling to enterprise. So what we will do today is understand how Kumar and Capitus is currently going about their journey. But maybe before that, what we will do is understand how Capitex got started. And Kumar, if you could even start with a brief background and introduction in terms of what you did previously, what was the outcome of that, and then how you decided not to retire or take break and right, you had the itch to do another startup. So give us a little bit of the backstory before we go and talk about more on enterprise as such.
Hey, thanks, Rajan. Can you hear me?
Yes, of course. Yeah.
I know. I mean, look, my background. I come from IT industry. Spent more than 18 years in the IT industry, and large part of that was with IBM. Okay, Battery Ventures decided to hire me and my co-founder Anand when their only company in India, which was earlier known as Bill Junction. Then later on it became Tech Process. Somehow they felt that the company can do better so that they can get a better exit as well. They convinced us both to join uh, you know uh, Tech Process in 2010, and that's when the whole journey started. We had to make that company more capital efficient. Okay, and we were realizing that whenever we are doing a B2B sale, we were giving a lot of free gifts to our clients. What does this mean is, a business is good, but you are gifting to the customer your sale till it's collected, right? And that's when me and Anand, we really try to figure out what's way we can do to solve that problem, and how do we manage our AR more efficiently so that we become a more capital efficient organization.
So
Okay,
Kumar, sorry to interrupt, but for folks who may not know the word AR, what does it stand for?
okay, it's accounts receivable. My bad. Okay, it's accounts receivable. So you do invoicing to the customers, you do sale on credit, but you find it extremely hard to collect. Okay, and that's a big pain point in the industry.
It's the story
Uh,
of several
that
companies in India.
No, and not just India, even US and many other markets in globally. India is it's a bigger problem. I agree. Markets like India and China. Having said this, what was an itch to solve our own internal problem became an obsession for us to solve it for a larger ecosystem. Okay, when we transformed Tech Process, gave exit to the investors, the next project, me and Anand were convinced that this is a perennial problem because uh, we were a mid-size company growing faster, and to manage our receivables we were using spreadsheets. And many of our customers at that time in Tech Process, when we connected with them, they resonated the same problem, right? And they were struggling, and that's when we realized this is a bigger problem to solve, and that gave birth to Capitex.
Which
Okay,
year was this? When did the exit happen?
so Tech Process was sold in 2017. It was acquired. It was a complete 100% acquisition by a French company called Ingenico. Okay, and that's and then post that exit, I guess me and Anand, we decided to, after successful integration of Tech Process platform with Ingenico, we decided to step out. And it was an interesting, if you ask me, it was a very interesting journey where when we joined, we were like a 3,000 people BPO.
Hmm.
Okay. And when we saw, and we were like, when we sold the company, we were a complete fintech SaaS company, 100% digital payments business. And when we sold, we were about 500 odd people.
Oh, wow.
All right.
That's quite a transformation.
So, yeah, and it was fun. I grayed my hair. Sorry, Danan, doing so. Because uh, building a company from scratch is have its own set of challenges and fun, and transforming an existing company of that size, and then then converting into a complete from a BPO to a SaaS come fintech is a different fun, to put it in a lighter way.
It requires DNA transfusion, right? I mean, change
It, it
everything.
required it required it required a complete DNA change. It's a mindset change. I mean, I remember my first gathering with the employees was, can this be a 50 people company? Okay, and they were shocked. What is this person coming from IBM talking this like language where we had 3,000 people, and yes, to the leadership team, he's saying, can it be a 50 people company? We were not there 50, we added 1 0. But we got, but it's still a better efficient organization. As I said, capital efficient organization is was critical. And we achieved at least some resizing and some uh, you know uh, defining what the core is. That was the fun part for us that time.
So you did a project that somebody brought you on to do a DNA transfusion. You successfully, completed that, and now you're saying now you started Kapittx to solve your own itch, which is the Paul Graham way of coming up with startup ideas, right? Go and solve your own problem. Is that
Yeah.
how Kapittx happened? In which year was it? 2018, 19, or 17?
So I mean, we moved out in 2019.
Hmm.
Okay. And first 6 months, me and Anand, we decided to do nothing. And when I say nothing, in the sense, we decided not to start working on the product or anything. We just decided to go and meet customers.
Hmm.
Okay. uh, we would have covered, at least face to face, we would have met about maybe 70 to 80 meetings over 6 months. We would have researched more than 200 plus companies and their balance sheets, and some very interesting data points came in. Okay. Account receivable continues to be among the top three tangible assets sitting on the balance sheet, and yet it is one of the most undermanaged asset. Okay. When I say undermanaged, people invest in so many tools within the organization, but their own money, which is like as I said, number three asset, is managed on spreadsheets. And that's when we realized that this is a bigger problem, underserved market. Okay. And there is a there if we create a platform that bridges this gap between an accounting ERP and the spreadsheets and the way they're following for payments, uh, we have a good story. And that's where Capitex, the whole team came in. How do we make B2B organizations, how do we help their collections and the sales team to collect receivable payments more faster and more efficiently than what they're doing before.
Right. So, what are some of the key lessons from your previous exit journey? What are mistakes that you made? What did you learn from them that you're applying now?
Well, I
What would
mean, there's so many of them. When you are when you're the first when you are given an opportunity uh, to transform, a co-found a company again, right? Um it's like a running train, and you have to start changing the wheel, and including the engine. Okay. The when I jumped into the bandwagon, the number one lesson that I learned was how critical it is to define what your core is. Okay, as companies in the aspiration to grow and to grow big, they end up, we all end up cluttering too much noise around us. Okay, and noise could be in a form of extension of products, segments which you're not supposed to serve, and so on and so forth. Right? If you know what your core, uh, and that core DNA is linked to the core problem that you're going to solve. Okay, if that is clear, a lot of things starts getting sorted. Okay, so that's one important learning that in that venture was what core problem that you're going to solve or you're solving. That's number one. Number two came up was all about people. Okay, you can't, the the rate at which your organization will grow is the rate at which you're going to hire quality people in your organization. Okay, uh, and and as I said earlier, when I was challenging the organization about how can we make this a 50 people, many couldn't believe it. Right, so having the right people to believe what should be our core, which means you have to declutter so many things. You needed the right people and with the right value systems. Okay, so that's a second important lesson to my view I learned, in that people are key. And I was lucky, I was privileged to work with some of the very very talented team members at Tech Process. Many of them came and joined me and Anand at that time to transform that company. They believed in the vision that we had. So that's a second part. And the third important, there are many, but the third, the most important is, we as leaders, we always find it so easy to select, and we end up doing, we there's nothing that we cannot do. We as founders, we believe we are superheroes, you know and we have this power to do anything and everything that we can do. And that comes the philosophy that deselection should be prioritized over selection. Okay, give a little extra weightage to what if we deselect this, what if we don't do this. Right, we're very clear, we try to justify our hypothesis that, oh, once we select to do this, what all can be done. Okay, I would give the reverse. What if you deselect this? What is that you have to lose? And equally, what you're supposed to gain. Trust me, you'll find a lot you can gain by deselecting rather than selecting. You
Yeah,
know,
they say this
so
thing, right? An anti to do is more important than the to do itself, right? So, on what are the things that you're not going to do is as important as what you're going to do. Or
yeah,
even like, there is this other phrase that I've heard, like, I mean, in the stone, like, the sculpture may exist, but it is all about removing it, right? Not really adding, adding
yeah,
stuff, right? So, what I'm hearing you say is that, when you shift your thought process in terms of saying, hey, what are the things that we have to change, what are the things that we are not going to do, and then find that core, right? Your first point and your third point is related, saying that, you have to understand, I mean, get to what matters the most, what is the core,
yeah,
and not really get distracted from there. And then, essentially just make sure that you are doing like removal, and making sure that, you're carrying the right team or the right people along with you who are aligned with how how the mission or the core is already articulated.
yep. I agree. Couldn't agree more.
Awesome. So most of the customers there would be what, like, enterprises, big companies.
That they
Uh,
were all enterprises. They were all largely enterprises. There was a business that we started, even SMB, but at a much later stage. But we were very focused on enterprises, which included companies across BFSI segment, e-commerce, travel, uh, education, government. I
what would be
remember.
the average ticket size for some of these?
Oh, depending on, like, a merchant average ticket size of our revenue could be anywhere between, and if I talk about an ARR, it could be about anywhere between $50,000 anywhere a ticket size anywhere between $25,000 to $50,000 will be our average ticket size in India.
Got it.
And there will be some skewed ones which will be really big.
Got it. So, going and selling to enterprise, it's like they say that it is hunting elephant, right? I mean, how you go and approach this, how do you go to market? How do you go and find them? Where do they hang out? What do they do? And how, what type of things you can tell them that they'll resonate with. So, if I'm a first time founder and I have to actually go and hunt these elephants, like what are the things that I need to think about? Like, what are the things that you learned in your past experience that a first time founder can actually benefit from?
Well, I mean, if you look, you used a very good analogy. Good part about the elephants is they can be seen. Okay, that's a good part, right?
That's a
But
good thing to say.
if you closely observe them, they are together.
Hmm.
Okay, they
Heard.
always move together. They move in a herd, right?
Yeah.
So that's the second characteristic. What is important now is, and if I correlate this to enterprise selling, we need to link this to what we call as a minimum viable segment. Okay, because uh, in enterprises you try to look for elephants, and you try to look for a certain other animals like deers and all in another their herd. You will find that they will not talk to each other. The
Hmm.
good part about enterprises is that if they are in one segment, they do talk to each other.
Hmm.
So that's one important characteristics of enterprises. The first and the foremost challenge that we will always face in enterprise is accessibility.
Hmm.
Okay, how do I get access? How do I get entry point to that enterprise? And then comes the selling and so on and so forth, right? Most of the time, what I have come across, and when I've talked to a lot of founders, young salespeople, experienced salespeople, is when we try and reach out to enterprises, it's all about talking their own product. Okay, they forget that enterprise, it's like a movie. Who's the character in the movie? In the character of the movie, in the movie is that enterprise, the person whom you're talking to, and not your product. Okay, so as long as their messaging starts revolving around what the customer is, what the pain point is, what the pain points are, right? People are willing to listen. Doesn't matter then whether you're a startup or an experienced, or a well-established organization, right? As long as you know whom you're trying to reach, what are the pain point that they're going through individually and as an organization, which means some research is involved. Because it's easy to get contact details these days,
Hmm.
right? You can reach out on LinkedIn, you can reach out, there are various database companies, so you know how to get their coordinates. The question now comes in, what's the right message that will cut ice, okay, with them, for them to at least respond, right? That's very, very important. As long as you are able to establish one enterprise who is part of that herd, trust me, you will get listened by others as well.
Hmm.
Okay, because when you sell to a manufacturing company, like one automobile company, and you go to another automobile company, or here I've done something, they will always be more inquisitive to understand, okay, what have you done there, tell me more. And then you go to third one, then you go to fourth one. Problem in enterprises sometimes what we see is, we go to an automobile in one case, then we go to insurance in second, then we go to some other enterprises, and that's when you miss out. You find that enterprise selling is very, very hard, right? So as long as one understand that the first entry point, the first starting point is accessibility, and that accessibility is a complete dependence on how much what that person is looking for through, you will have some great inroads in the enterprise selling. That's my and I've seen this happening. I've seen this happening in Kapittx, where there's no brand, we don't know the customer, Kapittx, we managed to win a Nasdaq listed company, uh, and they were surprised the amount of research we had done on them.
Got it.
Okay, and we when our email went in, our LinkedIn went in, they immediately responded saying that our problem, can we talk? And that enterprise deal for us closed in what, in 6 months, in less than 6 months time.
So you touched upon a couple of things, right? So I really like what you said about like you need to go after elephants which are in, like, since they are visible and heard. I'm going to use this analogy going forward, right? I mean, the good thing about an elephant is that they are visible and they are heard. So if you actually crack one, then if you actually choose to make sure that you're cracking, I mean, if you're following up with the others in the same herd, like elephants in, like, Africa and elephants in India, and really not really jump geographies, right? Then
Yep.
you will be able to like leverage the first effort that you have put in. But here is a question, right? Here is a question that we've also discussed in the past. Like you said, most of the people, they are concerned about, like, hey, how do I get the first introduction or conversation? And most of the people, like like initial founders, I mean, first time founders, they actually focus on saying, hey, how do I overcome if I'm going to get rejected by this first person, right? The thing that I've heard you say in the past is that, look, that should not be the most important thing that you should worry about or fear about. Like, the bigger fear is more around saying, are you going after the right one, or that particular enterprise customer or elephant is dragging you in the wrong direction, which may be away from the core, right? So
Yep.
how do you balance this, right? On the one hand, like if you go and crack like one deal, and then if you're cracking more on the same segment, versus, like you need to try out a couple of different things, couple of different segment, to say, okay, this is the segment that I need to zone in on. And this is a problem for every early stage company, right? And trying to figure out what is that segmentation of the enterprise customers that I should go after, where it feels like they are not going to, like drag us in unnecessary direction, but they're going to like make help us progress in a direction that is going to be helpful.
So there are a couple of things. There are a couple of things, if to given what I have seen, how established companies operate. When we had to transform, the earlier venture that me and Anand worked on, and even what I'm seeing in Kapittx. Okay, as long as you are clear in terms of the core problem that you're trying to solve. Okay, each of the segment in the enterprise that you're going to operate in will have certain characteristics. Okay, and that characteristics will be linked to their internal problem statement. Okay, and those characteristics will also mean to what kind of messaging you're going to do. Okay, yes, initially you'll always have to balance it out between, you know the when you're a very early stage startup, you want to have those young, early wins, so that it's a question of survival, raising money, and so on and so forth. But if you follow the if you know like, I'm taking a reference of Crossing the Chasm book, and the chart, from the early adopters to early majorities. It shouldn't happen that you pick up the elephant which is one isolated from the herd, and you never know that's a mad one. You may pick that one, but that elephant will completely damage your farmland, right? So you need to look at the characteristics of an Indian individual isolated enterprise that you want to target, and what the early majority is, as long as you balance the two. Okay, and that's where like, when we started, we spent 6 months only researching. Not everybody will have the luxury to do that. Okay, but that's the right thing to do, right? But even if you started, in terms of building a product, you shouldn't end up, now I have built a product, let me look for a, customers looking for a solution. Okay, you need to still look for the problem and the common characteristics of that problem, because of the way the banker will look at, as a product, and the problem statement will be very different in the BFSS, where the insurance will look at, right? And again, in the story, the story needs to resonate. The banker will relate to story of a banking language. An insurance person will relate to the story of an insurance language. As long as you can translate that, okay, that is when you'll start making some sense, to those customers. That's number one. You'll also find that the buying patterns will be slightly different. If the gravity of the problem is higher in a particular, the problem may be same, but the gravity may be different in one industry versus another. You may want to pick up that, and you may, so depend on what lens you want to use it, the deal size, the how early you want to close, what repeatably you want to build in, what kind of integration that you need to involve in the product. So all these characteristics will matter when you are when you are approaching an enterprise, right? And it needs to happen from in the initial one or two customers, great, or first five customers also great, fine. But moment you have five customers from fragmented industry, you need to take a step back. Okay, which of this will have a larger pie? Which one will have this actually mushroom into a early majority segment? And that introspection and validation must start happening. And that's when you will find that not just you as founder, but your rest of the organization also start aligning to that approach. The sales messaging, engineering bandwidth, there's so many things that comes in, which and it's with the kind of enterprise segment that you're going to select, the kind of problem that you're going to solve. All this will start lining up. I know it's a
Right. So
long answer, but
dropped some, pearls of insights there, right? I kind of sort of double click on three or four of them for the rest of the conversation. But there is this just one part that I want to ask you to clarify, and this will benefit a lot of first time founders. Is like when you said that you spent 6 months doing research, what does that research mean? How do you do that research?
so look, I mean, there are two, three things that matters. Okay, all founders, any startup that comes up, as founders or as leaders, we have a hypothesis, we have an assumption. Okay, that assumption could be of two things, two ways. One, I have lived the problem. Okay, and I believe the universe also have the same problem.
Hmm.
I need to validate that. So I go on scouting. I want to validate. There are second set of founders. I have an assumption that there's a problem, and they've already built a product, right? Then they go and start scouting for who will require that product, because they start looking for solution, right? We chose the other one because we knew the problem exists. Okay, and we prepared a detailed questionnaires. We prepared a metrics. I remember we had segregated industries and sub industries to put together about 17 categories. Okay, on one side, on one column, on the other rows, and on the columnar view we added what are the characteristics, what are the kind of problem, and on account receivable, what is causing that, what's the input that is causing this problem. If the problem is getting solved, what's the output they are expecting currently. Okay, have they tried to solve this problem before? How? Okay, what worked when they solved the problem, what did not work when they try to solve the problem. Will they be willing to solve it in future, and why, and will they be willing to pay? So we started doing that activity. Okay, and that made us look at what we need to do. Okay, so that's the first. So we were convinced that this is a problem that needs to get solved, right? It also gave us insight, which otherwise we were not aware of. And then in terms of some additional industries, if we open up and expand, we knew which additional industries that we want to tap to. While
Right.
we narrowed down a lot, but we also now have a very good visibility in terms of which are the other industries that we need to focus on if we have to start expanding our revenue. Okay, once so that's what this all research was all about.
Right. So I'm gonna sort of take a slight tangent. See, for me, many people selling to enterprise is about sales, like saying that it's elephant hunting. You need to put sales. But then you also talked about a couple of interesting things, right? One, you said that messaging is critical. The language of like the banker is different from that of the insurance. You also have to. You also said that in Kapittx we didn't have a brand, but we closed the scale. So in the role of enterprise, like elephant hunting, what are your thoughts on marketing, right, which is the umbrella term to capture all of this in terms of messaging, positioning and branding, right? And what have you learned through your past experience that you're now applying in terms of marketing in Kapittx?
Okay. Well, I mean, there are two examples. Brand definitely helps, no doubt about it. Okay.
And what is brand? It's just like such an umbrella term, in the enterprise context, what would you say is this brand?
So in the enterprise context, the brand represent what your company do. Okay, majority of them. Brand many times do not give what the company will do for them. Okay, it's a very subtle difference between, because so that's where I said, in enterprise they want to know, because what is that someone that brand will do for them. Okay, and what we can do for them only when we know what their problem they are having. Okay, so while marketing awareness about all the typical awareness is important. Okay, I'm not denying that. uh, but we chose, as Capitex, we chose an approach about being very very selective which enterprises we want to focus on. Okay, and we know that we don't if you notice, we've not invested so much in branding and marketing, right? But our research on the enterprise is very 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 good. Okay, we spend a lot of time before even reaching out to the enterprise or even a mid-sized organization about their pain points. We know their revenues, we know we have mapped that organization, so many things that goes in. Okay, and they like that. Okay, enterprise like to listen to that someone is coming and telling me what about their organization externally, and then the depth that you can go in. As long as you can build that DNA in your organization, which is very research driven, you will find that that will overcome certain limitations as far as branding is concerned. Because irrespective of whether you're an established brand or you're not an established brand, those companies are going to do your credit risk. They're going to do your check, your credit score, your checking, your vendor score, all that they will do it. Okay, but they will be more than willing to overlook, as long as they know this is the right company who understand my pain point, and they have the capability to deliver it. Okay, so enterprise have this, look, any product that enterprise is going to buy, there will always be something that they will have existing that is working for them, right? Enterprises are looking for comfort in those organizations, startups or established, who can help them navigate the change within their organization and make them successful. Okay, and that brings in when we talk about successful, that brings into, and I'm a big advocate of this aspect. When as startup founders we are approaching the enterprises, there are two critical elements that we need to keep in mind. One, organization to organization, what is the value proposition that you are offering to the table? This is organization to organization. This needs to be baked into only three areas. Area number one, are you helping them grow revenue? Area number two, are you helping them reduce costs? And area number three, are you helping them improve customer satisfaction? Okay, if your value prop is not baked into any of the three, the enterprise may not consider you. Okay, not just enterprise, any organization will not consider you. Okay, that's number one. When you're in enterprises, you're dealing with multiple people. An enterprise deal is not going to be decided by one person. At minimum you'll have two. Okay, and average you'll have a maybe 5 or 7. Okay, you need to have win themes for each one of them. Everyone is going to look and evaluate what is in for me and how I am going to be winning. It's not, they're employees there. They also need to see a personal win, and they will also balance it out the value proposition. Higher in the organization or enterprises you go, they will put the value proposition more than my personal win.
Hmm.
Personal will be important, the degree will vary.
Hmm.
Lower you go into the organization, the personal will matter because they want to grow in the organization. They want to be winners in that organization, right? So
Right.
that balance, that clarity starts coming in. Then you'll find that enterprise selling will be much different, and I wouldn't say easier, but you'll start enjoying it because you started putting a framework to the enterprise sales.
Understood. So, Kumar, there are a bunch of questions that have come up, so we should cover them real quick. So, Arun Velakat, he's saying, yeah, he's just, this is not a question, this is just a comment saying that Anand, that is a profound insight. Anand commented saying that if you have lived the pain, then you stand a better chance to solve it well. So, that we will, move on from. Then, Jayant Swami, he's saying, how do you prioritize the initial target segment to focus on?
Okay, there are so many ways. I mean, as I said, as founders, we have a gut, we have an assumption. Okay, and that assumption needs to first, it in some shape or form needs to get validated. Okay, if you don't have an access to enterprises, you will have access to people who are associated with those enterprises. Okay, those segments, try and at least validate your assumptions. Okay, uh, then do some research on some of the company's balance sheets. Okay, if you are an HR tech company, you will get some tremendous insights from the annual reports. What percentage of the money is spent on people? Okay, year to year, whether the money is increasing or decreasing. Okay, if you are focusing on a marketing company and your product is around marketing and insights, you will find a good mention in the annual report and their public speaking and the CEO speaking what are the marketing priorities, which segment they are focusing and selecting, and so on and so forth. If hiring becomes a criteria, then you know whether the hiring is going up and down. There are so many characteristics that you can use to basically get like a score. If if this criteria is met, I think so there is a good chance that my their budget will be approximately so much. I need to I need to pull out this much pie of that budget, right? Do some research on what kind of hiring they are doing, what kind of job posts they're putting. That will give you another indicator. Okay, so this will allow you to at least choose between segment, if not going all 10, you may at least come down to 3, right? Or 2. I hope this addresses.
Sure. So, Kumar, so what I have seen is I've worked in finance, right? I mean, fintech, not fintech finance, like, worked at QuickBooks. And I've seen that, AR is a perma problem. Like, every year, like, for years it has existed. So 10 years ago, I have seen companies, trying to solve the AR problem. And even today there are, but something that has happened in the AR space, right? The AR tech space, the last 2 or 3 years, where it has suddenly become very, very, sought after problem to solve. A lot of, like, the volume of companies that are like trying to attack this particular problem has increased. So talk a little bit about, like, what is happening in the space and why there is, like, a lot of interest in the AR automation as a market or a space right now.
I mean, look, whenever the economy across the country starts tightening up, okay, you will find that the need for cash changes, right? The accessibility of cash significantly changes.
When liquidity is
Raj,
low, people look for cash.
uh, uh, yeah, and there's a clear equation, right? Moment the market situation on the cash starts tightening up, people will look for where can I get my cash. Okay, and that's when the sudden aha realization, oh, it's my cash. I am gifting to the customer. How can I get it faster? Right? So that's one. When there's one big element in last couple of years, there is a strong realization coming in different, not just India but in the US, that okay, this is our money and we need to collect on time, and we need to collect and faster. So that's number one. The second part about the aspect is whether it's Tally, QuickBooks, SAP, NetSuite, Navision, every ERP have some element of AR. They give basic reports, but understand that every product you build have a it goes back to they solve a core problem. These are bookkeeping softwares, right? Now you trying to it's like you can imagine a typical vehicle carrier in India. Okay, it's supposed to do so much, but then you add so many things around it and you try to make it a bigger carrier, right? It may not be the most efficient carrier. All right. And that's what some of the ERPs have tried to do over a period of time. They build a mini module for payable, they build a mini module for AR, and so on and so forth. It serves a purpose to certain organizations, but it need not. Will it be effective? There's a question mark, right? 90% of the companies still live with ERP and Excel sheets. You like it or not, okay? People using QuickBooks will still have Excel in their organization. People using Oracle or SAP also use Excel sheets. Very few companies I've come across and they say we have truly automated, right? And now that there's this realization is there, there's a better way to do this. It's like you had feature phones, fair enough, but smartphones have changed the
The game.
life, right? Same thing. We have some basic. It does the work, but let's in the today's connected world, we need smartphones to do things better. Okay, and AR is a two-wheel, uh, you know, uh, locomotive. Okay, you can't just run on one wheel and say I'm going to travel. One wheel is connected to the external world, which is your customers. The second wheel is linked to your internal organization. Okay, they both need to be in motion in a particular way,
Hmm.
right? And if you can't just say I'm going to do inter like 68% of the customers will pay on time because they were reminded on time, but 70% of the payment do not come on time because of not because the customer issues. 70% of the payment do not happen on time because of internal issues. So as AR is going to get evolved, people will, I know companies like us will try and refine this two-wheel locomotive more and make it more and more efficient with AI, with generative AI capabilities built into the product. And Kapittx is doing something exciting in this space.
Awesome. So, Kumar, I think we are coming to the end of our LinkedIn live. Before I wrap up, is there a question that you think that I should have asked that I did not, if it comes to your mind?
Not that I can think of, Rajan. You've covered comprehensively almost all that I can. Uh, you've asked all the right questions, so it's
Yeah.
good for
What
now.
would you say should be like a takeaway for like first time founders? What would you like them to take away if you were to say in one or two sentences?
I mean, look, um, there's one word that that resonates with me a lot is the noise. Okay, we have to do as first time founders. We have to do so many things. Okay, and we end up because if we get we there's a very high possibility we drift away from our core. Okay, and we start creating a lot of noise around us. Okay, uh, we need to simplify, we need to keep things simple and not make it complicated. It's like managing the complicated complexity without getting complicated.
Got it. Awesome. Thanks, Kumar. Thanks for taking the time and sharing some very good insights and interesting analogies on enterprise hunting, enterprise selling. Thank you.
Thank you, Rajan. Pleasure. It was a pleasure to be with you, and thanks for the
Yeah.
time.
Yeah, folks, we will see you in another LinkedIn Live. We will sign off now. Bye bye.
Bye bye.